Toronto home prices are down $121,000 from the peak of the market. Whew, this one's gonna be fun to digest. Stay tuned, promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property TV. So glad you joined me here today. Now, in terms of the amount of articles we're gonna go through, there's gonna be a ton, but there's a lot of content that's coming up. So make sure you like and subscribe and stay tuned to the Prime Property channel. So we've got prices being down. We're gonna talk a little bit about the peak from where it came from. And then we'll also talk a lot about the interest rate and how the affordability is, the highest and the worst it's ever been since like the 80s or something, right? And you're looking for my kind of full-on deep dive, kind of region by region market watch. Make sure you subscribe, click on the little bell because it'll be coming on Thursday. I just gotta finish up framing some of the data for you. So without further ado, the first article here, we got GTA home prices drop 121,000 from February peak as rising rates gut sales. Oof. I love the Toronto Star headlines. They're just great. Like gut sales, that's good. If you look at kind of where the market is now versus February, like everything's obviously changed because of the rates. But if you kind of compare like year over year comparison, as I'm looking at the market data, 2022 May, like the month that just passed, had the second least amount of sales ever in the last 15 years, only after the pandemic, May 2020. So it's really, really bad. And the prices are down about 9.5% from the peak. But obviously everyone's going to round it to 10% to make it sound better, right? Because 9.51, when you round it, you do round it up, right? So the first thing I'm going to go through that I highlighted here, and again, hats off to Toronto for their Toronto Star for their low mapping. It's actually quite good. But when you look here, it says, it remains to be seen how trends are going to unfold right now. And you're seeing sales drop off month over month and year over year, and listings are flatlining. So that's kind of like the key thing, what I'm saying right now. It's like, yes, prices are coming down. And I do think that there's more wiggle room for prices to come down for, considering that we're probably gonna get another 50 basis point hike in July. But there is a level of like, we've accelerated the price drop because I do think that some people had to sell some homes to close on other homes, so they have to take less money, right? And when you're less frenetic and all of a sudden all the buyers are on the sidelines and you're not getting the price you need and you have to sell, the prices tend to be lower, right? That's kind of where I think it is. And inventory is building, right? So technically we're still in a very like, very, very, very soft sellers market at like 2.3 months of inventory, give or take. And once you get to 3 or 4, it's a kind of balance. But it's very much kind of like the sentiment is nobody wants to buy. So right now, unless your kind of home is very, very pretty, picturesque, renovated, ready to go, or like your condo, you're probably not getting many showings or kind of offers, on your property, right? And that's kind of why everyone right now is slowing down and not looking because, summer weather's here, everyone's going to enjoy themselves. They're like, screw real estate, rates are going to go up, it's going to crash. That's kind of the sentiment that's happening right now, right? Now, this is one of the things that I want to highlight to you, is that where it says, because we're not in a recession and employment levels still remain very high, there's no impetus for people to sell their homes unless they need to. It's possible the number of listings could fall because potential sellers don't see getting the price they want right now. So when I was going through some of the numbers, the amount of new listings is actually a little bit lower. So if, my clients are calling me like, hey, Zhen, we're going to sell this property. I'm like, well, you may not want to unless you have to, right? So it's kind of one of those things like if you have to sell right now, you can still buy in the same market, right? And again, I was saying you should sell first. Now, if you were to be buying right now, obviously you could definitely, catch a couple of deals here and there. But the idea of catching a deal, especially if you're not like an investor, then a lot of people are like, oh no, I don't know if it keeps falling. I don't want to be the left holding bag. What if the prices drop some more, in the next month or two? And that's kind of where everyone's like, you know what? I'm just going to sit and watch and see what happens. And knowing that we're probably going to get another rate hike in July, yeah, that's probably, what most people are going to do, right? And the next date for the announcement after July one is like September. So August will kind of be like a slow news day and hopefully everyone's in cottage season and enjoying summer, right? Yeah. And then the last thing here is that condo sales and prices are not affected by the downturn in May, but probably because of lower price point. Now, I've been looking at some of the numbers from the market watch. It's still like down from the peak in February. Like I think we're under 800,000 in like Toronto proper right now for condos, and it peaked at like 840,000. So it's still down, but it's just one of those things where like, if you held a condo and you bought it in say January to March, you're like, cool, you didn't come down much, right? Relative to the rest of the market, and that's great. But if you held a condo since like 2020, it's gone up like barely anything relative to like maybe like the freehold suburban homes where they've gone up like almost 100%. And now they're down like 10 to 20, 30%, right? So it's all relative depending on the period in which you're holding in. Like everyone's got to remember, like real estate is super long term. Like stop looking at like month to month over data to see whether you're doing well affordable or not and dictate whether you're rich or not. Because at the end of the day, like the way I look at real estate, I buy and hold, it pays for itself, and then I look at it in like 5 years. I don't constantly monitor it like a stock every single day and keep refreshing and see what it's worth, or like Bitcoin where it could change like 3 to 5% every single minute, right? So it's just a different approach. But I think because of the technology we have right now, you could do something like this, and you have the apps like House Sigma where you keep seeing like what it's down, what it's up, what it's worth, and people just posting kind of like, oh, this sold for this much, this is coming down, and just implying a lot of negativity in the headlines right now. And while it's fun, remember, like this point where you just said, people who don't need to sell aren't going to sell. But it's just the people who got caught kind of in between buying and selling. Yeah, they're in for some hurting. Yeah, depending on what their appraisal comes back at. All right, so we got the next article here. Something along the similar lines. Greater Toronto home prices have fallen nearly 10% from their peak in 2020. Yes, peak is February 2022. The nearly 10% is 9.51 from the data I looked at earlier. And you can see the things I've highlighted here, that the amount of sales declined 38.8% from 2021, which is very true, and they're down about 9% from April levels. So the average home for the region clocked in at 1.21 mil. Still up 9.4% year over year, but sliding down 2.6 from last month. Now, you have to be careful when you look at this data, right? Because if you look at year over year, the prices are still up. But if you look at month over month, it's coming down, right? So like if you take a couple steps back long term, yeah, this is actually fine because, you know, we went up really high, we're just coming down a little bit. The question is we don't know how much we're going down. The way if you look at month to month is that it's a little bit more of a zoned in kind of microscopic lens. It means that you probably are still, you know, deaccelerating, and we just don't know where it's going to go because of the interest rate. What I think is going to happen is if we stay this way and we get interest rate hikes until like September or so, there's a very good likelihood we're actually going to have year over year decreases in price. So like anyone who even bought in like say September of 2021 may see a negative price if the rates continue and the sentiment continues this way, because we're deaccelerating about like 2 or 3% a year, a month. And if you're doing 2 or 3% a month, you're ranging between like 24 to 36% year over year decrease, which is kind of in line with the 20 to 30% increase we saw last year. So it really is kind of why everyone's kind of on the sideline. The sentiment's kind of really bad right now. They're just kind of like, let's wait and hold. Let's see what's going to happen, right? And the last thing here I highlighted is Bank of Canada hikes rates, including the 50 basis points on June. So this article must have come out before June 1st. And we already saw the June 1st hike, those 50 rates, just basically locked in. Everyone kind of saw it coming. And now the psychological aspect where potential buyers are waiting for a bottom in price. This will likely continue through the summer. However, as home buyers adjust to higher borrowing rates, housing demand will be supported by extremely low unemployment, high job vacancies, rising incomes, and record immigration. So what it's saying is that the fundamentals in Toronto are still very, very good because of all those things just said, you know, housing demand, high unemployment, high job vacancies. High job vacancies, you mean low job vacancies, right? Gotta double check that. Anyways, and then a lot of immigration coming. Those are like the macro factors I talked about before. But at the short-term interim, the rates are increasing, which is causing the sentiment to pull back, right? So for those of you who can wait, you can probably still wait and see what's going to happen. Because like I said, I think the summer is going to be a little bit more of a lull. Because if July has a baked-in interest rate hike, the sentiment shouldn't change. And there's no interest rate announcement in August, because even apparently Bank of Canada needs to take a break in the summer. And then we're coming back in September. And that's kind of going to be where we'll see which direction, like the second derivative, like acceleration, is heading in the market, right? So if we have a lot of inventory build up in the summer and then we get on the rate hike in July, we're probably starting off the fall market in September. We're like, it's still pretty bad. But if not much inventory comes out, like from looking at the data for Thursday's article, right? Like, and the inventory stays around like 2.5 months of inventory in like all of GTA. And then we head into September and we may not get a rate hike. We're like, maybe that was the bottom. You see what I mean? So like, we're really at a point where it's just wait and see what happens in the summer and see the market play out and see the interest rate play out, right? That's kind of what a lot of people were asking me kind of, and what I'm telling them what to do, right? And low key, I also just wanted like a less, busy, more relaxed summer, and it'll, hit the curb running in September, maybe. If this is the type of content you enjoy, make sure you help us smash the like button and subscribe to the Prime Property channel, because we put out awesome content like this every single week, where I react to certain articles about what's happening in the market to kind of give you my critical thinking of what's actually happening. And yes, these headlines are really negative. It is all very much true, but I'm just trying to provide you some color from like a more, neutral perspective as much as I can. Like, I do believe in the real estate market, but obviously, like, when, you gotta call spade a spade, it is slowing down for a reason. And you have to be very good to be able to trade in this market, right? Especially if you're an investor, or if you're like just a first time home buyer, you gotta see kind of what makes it good for you to get in the market right now, right? So if you want to work with us and our team, you can book a call and a strategy call specifically, whether you're buying or selling in the GTA market. You can do so using the link right here. It's www.chatwithzen.com. Now back to the article. The next one we have here is bought under asking the new sold over asking. Pretty funny, pretty good headline. I gotta say, pretty good, right? So they're saying right now that about 75% of Toronto freehold properties, primary, semi, and detaches, were selling over the list price, and now it's like 62%. So it's dropped by about 13%, quickly by my math. Keep in mind, more than half the properties selling over asking is still selling over asking, right? There's like an adjustment period. Like, obviously, if you're listing for $999, hoping for 1.5 mil, you're probably not going to get it. But if you're listing at like $999, trying to get like $1,050,000, yeah, you may do, because the market is kind of moving depending on what type of product you have, right? And that's the thing. Like, in a market like this, you really need to get a good realtor's help to kind of get an idea of what's going on right now and what your market is actually, your property is actually worth. You can't just like throw it up there and 10 people are going to come through your property anymore. You actually need to market it and have a good strategy. Weird, right? Yeah. And then there's another thing that it's kind of like going around. I've been reading a lot about this in an article. A lot of people saying that it's a buyer's market. Toronto's not a buyer's market. Like, if you want to get into technicality, a buyer's market is when you're over 4 months of inventory. We are still at like 2.2 right now. So we're not even close. We're just like a very, very soft seller's market. But what I did say is like that chart about the change in pricing in the months of inventory. We did kind of break that model last month with kind of the data. So that, maybe where it like feels like a buyer's market, but technically in the seller's market. So we're kind of straddling the line of the two. I'd probably say that closer than to absolutely saying that, it's a buyer's market, right? And then the last thing here is many of my first-time homebuyer clients are losing on multiple offers on 1+10 condo apartments. That, yeah, is true. I've seen a couple of those, especially if you're around the UT area. If you're pricing it like the $599 price point when they usually sell for like $7, those are still going on multiples. Arnie had looking at like some entry-level freehold homes, sub $1 million, that had 8 offers. So like depending on the price point, what type of asset it is, there are still multiple offers. But it's just like the suburban stuff, especially like the town and the large detaches, that stuff's not moving. Especially if you want like peak pricing from February when some of the areas such as like King and Whitby have dropped like 20%, right? So that's kind of the difference between what the market is right now. And then we got here, there's confusion for buyers who's been looking because when they see a listed price at budgets, say, no, this is going to sell for $100,000. I have to tell them, no, this is where we're at right now. And a lot of listings are at fair value. So this is kind of like saying, well, I was saying just a little bit earlier to highlight that point is, well, everyone has a different strategy, right? Like if you have a very, very good property and it shows very well and there's a lot of people buying and the last one maybe went for multiple offers, yeah, I would position it for multiple offers, right? Because you have a lot of people looking. But if you don't, I would highly suggest you not try to elicit multiple offers. I just put it at what you're trying to get, like a regular market that we saw from, 2017 to 2019 or so. And then maybe someone comes in and offers you at list price if you're lucky, right? And give you full ask or a little bit less than you negotiate, like a regular market. But people have to adjust to the type of market we are. And that's why, again, like not to kind of say you need to go be a realtor, but like you just need to understand how the market's working right now. And you sometimes can't see how the listing is positioned if you're just using like realtor.ca or House Sigma, because there's a little clip at the bottom that says, they're reviewing offers at a certain date, which means they're expecting more money, right? But we don't show that on realtor.ca or House Sigma. And that's kind of a problem in our industry, but yeah, I'm not going to bark up the wrong tree. Someone's going to yell at me. Then we got the next article over here. Bank of Canada raises benchmark interest rate to 1.5%. So that is true. We went from 0.25% to 1.5%. So that means we've increased it 1.25%, or we have basically 8x'd the interest rate. Yeah, that's a wowza one, right? So they did that on Wednesday. No one's really surprised. Like I was saying, even in the earlier this video, probably going at July, I think it's July 13th is the date, right? Now they're talking about kind of what the impacts is. Just because prices come down for the housing right now, it doesn't mean that the monthly carrying cost for anyone who gets a mortgage is the same thing. Because if you have a lower rate but a higher price, it could very much be the same monthly carrying amount as if you have a lower price and a higher rate. You see what I mean? So that's kind of why, like, just because the rates have the prices have come down, rates have gone up, it doesn't make housing any affordable because everyone just pays and you buy a home based on the monthly payment. So if you're $3,000 a month and your prices go down, but your interest rate and you're still $3,000 a month, same thing in terms of affordability. And that's kind of the problem right now in our market right now, because the rates dictate where the market is. Obviously, going to be a little bit frothy when it's low because money's cheap. But when money gets a little bit more expensive, and mind you, it's all relative. Like rates right now at 1.5 is still lower than what it was pre-pandemic, which was at 1.75. We're probably going to hit the 2% rate over that come July, but relatively under 3% is still very, very cheap. Like my whole metric in terms of whether real estate makes sense has always been the real negative interest rate, right? And which is the real rate. And right now it's negative, meaning that the cost to borrow is less than your inflation, meaning you're still up ahead. It's just, we've been so accustomed to the kind of like being addicted to cheap money at 0.25%, which is basically free, that when you go from 0.25 to 1.5, it's a really big increase. But relatively speaking, it's still record breaking low. It's just, perspectives, right? And there does need to be a little bit of give in terms of price, because you can't sustain such, high monthly mortgage payments on such expensive homes when the rates do go up, right? And that's kind of where rates and prices kind of have a fluctuating way of, working itself out in the market. And then the last one here is, housing affordability suffers worst decline since 1994. Oh, fun. Very fun, right? So they're saying that for the first time, it would take more than 50% of income to represent a household to service the mortgage, which is a lot. I'm also pretty sure that this metric is for Canada-wide, because I think Ontario and Vancouver is already at like 60%, which is absolute wild. Now, keep in mind, like they're taking the average income to service the average prices mortgage at 80 loan to value at whatever the rate is in 30-year mortgage, right? But what that basically tells me, and I've been saying this, the income to price ratio has been all messed up for a while, and it doesn't mean or what it could be doing for the prices. All it basically does is saying that, hey, you know what? It requires more than the average income to afford a home in Toronto right now. So if you're making average income, you can't afford a home in Toronto. It sounds really harsh, but that's kind of the reality right now. That's kind of why not surprised about this, and it's actually quite bad, like, because this is nationwide. Like most of we talk about Ontario, but nationwide being over 50%, yeah, it's pretty rough. Now this one is interesting, right? Like some of these metrics I'll break down for you a little bit, but like they're saying that the average price is 1.23 mil. It's up 7.2% since last quarter, correct? So they're taking 20% of that. So you need about $240,000, and they talk about what it takes to save that average income, how many months it takes to save that average income. And then this, if I'm doing some really quick math, you're looking at 30 years, which is absolutely ridiculous, because if it takes you 30 years to save the down payment, assuming prices don't change, right? And it takes you 30 years to pay it off, you technically you can pay off your house if you start saving your down payment at the age of 0, and then you fully pay it off at 60. It's absolutely wild, right? If you think about it. Obviously, a lot of people who are buying these homes, like they're not jumping right into the average home, like a semi or something, which is like right the median price, but it's more so like they're moving up and they have equity, or they have, bank of mom and dad to help, right? But to have these numbers, where it's like right here, so it takes 75.6% of your income to kind of pay for your mortgage. It's wild. So it's not like something that's funny, because we obviously have a housing crisis, right? And when you talk about housing affordability, it means different things to different people, right? So like I would say everybody that's, under like above average income, right? Say under $100,000, your affordable housing means that you can't get into the market if you're in the average income. But if you're like sub like $40,000, then that's like social housing, and that's a housing affordability crisis where they can't even have anything to rent from that's even market rent, right? So housing affordability means different things for different people, and it's just like a huge crisis we have in like Greater Toronto area, and interest rates going up isn't actually going to help it. There's a lot of things, a lot of people talking about it, supply NIMBYs, there's a whole bunch of things that we need to do to fix this, like remove the red tape. But it's a very, what's a good way to put this? It's a very complicated problem that requires a complicated solution, and there's no silver bullet. So I can't say what's going to fix it. It's just we need to work towards it as a whole, as a city, right? And hopefully we're not seeing 75% income to service debt on average income. It's rough. It's really, really rough. Anyways, hopefully this gives you an idea of what's happening. There's tons happening right now. And I also have the market watch data I'm just finalizing. So make sure you click on the little bell and the subscribe button to check that out. It should be probably coming out sometime Thursday. If you're looking for, talking or making a strategy call about whether now's the right time, or you want to get ready to for that time, when to be opportunistic of, when we hit the bottom, we generally take a lot of analysis to kind of analyze it. And while we may not necessarily be able to, time the bottom all the time. Actually, most people can, right? That's why the whole dollar cost averaging. But I can tell you when we are heading in the other way in terms of acceleration, where prices are going up on a month to month. So if you kind of want to get an idea of where I think that is going to be, and you want to kind of, get ready, get some liquidity going, you can book a call with me using the link right here. It's www.chatwithzen.com to kind of strategize when to pull a trigger and what you should do to get ready to pull that trigger. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.